Hello everyone, it's the voice of GBPNZD, and we're going to be looking at some setups we have on our chart today, and also try to look it look at it in a different direction. Okay, so I want to quickly you know I actually promised that I'm going to make this video very educating, and I'm going to go back to throwback on those setups, okay, from other charts, and then I'll just bring it up to the current price movement, and then actually go down into explaining what I think and the direction next where price possibly go to. Okay, so let's get right into it. Okay, so currently at the moment we have a setup here, okay, on the EURGBP. Okay, on the EURGBP, I want to also point out something to everyone, okay, that is actually on this recording. Okay, we have two types of market. It is either we have the risk on market or we have the risk on market. All right, so during the risk on, okay, sentiment market, all right, those risk on pays will tend to go up, which are the AUD, NZD. All right, so for the CAD is a commodity pay. Okay, so if you're going at looking at from this direction, we are going to understand that those risk on pay is actually the NZD and the AUD. The risk off pays are actually the JPY and also the USD. Okay, so a little bit of the CHF, because CHF actually follows the risk sentiment in the market. All right, so whatever the sentiment is in the market, that also tends to follow as well. But we're going to look at some setups which we have today. At the moment, what we have with the EURGBP is a market that have made a downtrend. Okay, but here we saw this market then try to make push up from this point on a weekly time frame, but we saw that it actually faced up with resistance inside of this area. So guys, let's drop down here, this correction, this drop, followed by this correction, should follow by a drop, and it will continue in that format. Okay, so why do I think of that? I'll just take you back in time to show you also a similar setup that actually happened also in the market, which we actually took advantage far back in 2018 during December. Okay, so also with a similar setup, we have this down drop here, this huge retracement hit by very strong resistance here. The BS came into the market, and definitely you see how they took price back into this huge support before they can now rally. But one thing you need to understand and get clear from this setup is that whenever the BS are coming in, they're coming with impulse, correction, impulse, okay, correction, impulse. So the move in that way to the downside. So we can also expect that to move also with the EURGBP. So if you are expecting that to move with the EURGBP also in that format, we are going to put up a high here. And definitely when we go down to a daily time frame, we'll be able to spot that the area which we should be concerned with in terms of the entry is around here. Okay, so it's around here we'll be concerned with. Then when we go down to the H4, I will now show you from the H4, what you need to do from the H4 is that you need to take a Fibonacci from a swing high to a swing low and then target around the 78.1 Fibonacci level. So those Fibonacci levels, 78.1, are the extended Fibonacci level, which you can actually have a sell trade inside a particular swing for this kind of setup. So we look at the 78 to the 61.8 doesn't really hold price inside of this area. So we don't look at this area, we look at the overextended. So we can look at coming into a trade here in the next H4 candle, probably if we could have an entry. So the entry we'll be looking at will be, okay, for price to sort of create a rejection candle inside of this area, and only then can we look to short to the downside, either a pin back or a failing candle on the H4. Then and only then can we look to set up for a bearish setup. All right, so let me take you straight into another chart and also show you here on the GBP trade that we actually missed. Okay, we actually missed a couple few pips from that trade, but we did as much as possible into trying to catch the remainder of the trade. And the GBPCAD, we had this downtrend here, impulse, correction, impulse, okay, correction, Okay, so what we spotted here a bullish setup here, and overall we wanted to short this trade to the downside. All right, so that's what we wanted to do, because definitely when we look left, what we saw that we identified that this candle here actually created a reaction in the market, and that started pushing market to the downside. But with this candle alone, we actually started to have reasons to want to short this trade to the downside. So what happened and how did we miss the trade? What we saw here initially was a bearish flag here, which after a breakout, what we did as traders, retail traders, was I actually did come here to put a trend line here. Okay, I came here and I put up a zone here, and that was the only area which I wanted to start looking for opportunities. Okay, so as a trader, what I did on Friday was start looking for that opportunity. But here we saw how Monday came down, dropped, met this Tuesday high, and then dropped to the downside. Now, what happened to me as a trader then was on Friday, okay, this was on Friday candle, which I was looking at, okay. On Friday, what I started to do, okay, on Friday, what I started to do on Friday was look for reaction. So when I had this reaction in the market, what I wanted to do was to put up another trend line inside of this zone. So by the time I had this indecision candle here, I had to wait for a bearish confirmation, which came in with this candle, and I knew from that point on I had a trade. Okay, so when I was able to have a pullback, okay, so I actually monitored every action of the market. When I was able to have a pullback with this candle alone, with this candle here, I was in for a trade. So what I did, and I took that trade, which was a super awesome trade. And how did I get off of that position? I took a Fibonacci extension from a swing high, low to a swing high, and then put up here a sell order, at 0.10, and my target will be the 127 Fibonacci extension, which is around this zone of the 1.71713. So this is 0.713. Boom. All right. Okay. I think I got it wrong. That's 1.713, not 0. Right. So 1.713, and boom, voila, I was in a trade. Okay. So, and my risk was up high here. Then I knew I had an entry. Boom. 1.757. So let's put it up there, 1.757, 0.757. Okay. So then I was able to risk $110 to make $219 as my TP1, but my TP2 was inside of this area, which was about $300. Now, how did we miss all this action? We missed all this action because we should have spotted here that this was a trap here, but we did not spot it, and it went out to hit our stop loss here and came back on. So definitely this was a trap here, and this was an exhaustive rally. All right, it was exhaustive rally. So also with this setup here, I'm going to show you another setup which we have currently in the market. Now at the moment we have a trade that has made this impulse from this low to this high. Definitely, I talk about this many of the times that I want to see this drop down and continue to upside and not drop to downside, as everyone would want to say. Now, where is our entry for a short trade to the downside, at least to correct all this major move to the upside? Now, on the daily time frame, what we have here, we have an invitation candle starting up the rally. Invitation candle starting up the rally is not a good indication for a bullish setup. Okay, I like to start up my bullish setup with a filling candle. All right, that way I am sure of the strength that the market is coming in with. Now, definitely, this invitation candle starting up this bullish rally, and you can see how everything fed out. Drop here, exhaustive rally, and then the drop came. Okay, get this guy. it's very simple to look at the forex market and then understand what the market is doing. You need to have a set of plan and rule. All right. So now we have an entry here. But we're not going to be looking at this entry here because we might not just have price come up to this zone before we can then short. So what we are going to be doing first is that we're going to be looking at the composition of this setup here. Now, what we have here is a bearish flag. Okay, what we have is a bearish flag. Okay, as we can clearly see, what we have is a bearish flag. So what we are going to be doing as students, okay, of price action, definitely what I spotted here was also similar to what I showed you with the pound sky. This is a trap. Okay, everyone started shorting here. I started shorting here because of the half-week strategy which I came into the market with, and I was able to break even here and then hop on a buy trade to target the upside this area here, where I also have my sell limit order there. Okay, so let's go down to the H1 to see what really is happening on the H1. So this huge movement here is a trap, and by the time this candle started to slow down here, I knew I had an entry. I had to wait for that very candle here to set up nicely, and I opened a long position, and my risk is down here to target the upside. Now let's go back to that pound sky trade setup of the trap. Okay, so if we go down to a H1 of that setup here, which we spoke about here, and you can see how this whole trap happened on the H1. If we take a Fibonacci extension from a swing high to a swing low, we can see that this area actually came in to hit the 127 Fibonacci level. So my stop loss was actually a little bit above the 1.618 Fibonacci level at the max. Okay, so in here we are going to put up that same strategy into this trade here. All right. So what we're going to be doing as students, we're going to put up a Fibonacci extension from this swing high to a swing low. But that would be a wrong practice. Okay, that would be a wrong practice because you are going to get it all wrong. Okay, definitely the extension should be from this high here to this low here. Now we are going to do this the right way, and we're going to put up that extension from that swing high to this swing low, and we'll put up our target inside of this area. So in here is also our sell environment of the 0.924 area. Then we are going to start by putting up our entry here for a short trade, and also our exit will be also here. Then we'll put up a sell trade around the areas there. So we're just going to put up 0.10 lot size. Then we are going to put up our risk. We just put up our risk up here at the 0.927. Okay, risk will be 0.927. Okay, from that point on, we'll just put it up there, and we'll just look at our risk, what our risk looks like, and that's $38. Okay, so that's very cool a risk, and we'll just look at our target. Okay, we'll look at our target. Okay. Fibonacci extension of the 127 will be our first TP1, which is this area, and TP2 will be this area here. Okay, so just take out these lines and take out this extension, all of this, and we'll just do what to it, and we'll just put our TP. Just go ahead and put our TP1 at 0.904 area, which is a very cool TP area, and let's see what our risk reward will look like. That will be $253. So we are risking $38 to make $253. That will be a very good trade to take. So in terms of pips, we are looking at capturing 196 pips as TP1 and 248 pips as TP2. So if you are looking at taking our second take profit instead of here, definitely we are going to be risking $38 in capturing this whole massive. Okay, let's look at the reward there. 320 pips. So that will be 1:9 risk to reward trade. Okay, so guys, that'll be all for today, and I hope you have a wonderful day. But before I wrap this up, I want to show you guys what is happening with the dollar. Okay, so we just take a quick look, a quick peek. Okay, a quick peek at the dollar indices. The dollar indices here was currently trading at a downtrend here. So which was quite unique here. But definitely this trend here, I'm not looking at this continue, while I'm looking at this internal trend. This is going to try to expand of some sort. Okay, it's going to try to expand of some sort from this point, which we had here. It's going to try to expand of some sort. So if you go down to the daily, we are going to see that this expansion is about starting. Okay, so what we are going to be doing, this is a downtrend. So we are going to be looking at this setup and correlating it with a drop. So we look at here. We will look at the 23.6 and also the 38.2 because most likely that is where everything would happen. Okay, where everything will happen before the next drop. So this can actually start still further go up, but we're looking at this structure. This can still further go up because definitely this is a fake out. Okay, this is a trap. So I speak about this many of the time that when we look at the candles, we know what the candles really indicate. This is a trap. Okay, so if there is a cool bullish setup, it should happen back here. So this is a trap, and this is an exhaustive rally. This is an exhaustive rally. It requires a lot of strength for the market to go up from that point. It is exhaustive. It's taking it so much energy. So definitely we expect this to truncate anytime soon, but we will need to see confirmations and then we'll start shutting it back to the downside because these are exhaustive ones. So if we look at our Fibonacci level correctly, if we want to add the additional Fibonacci extension which we spoke about, we're going to add 0.23.6. Okay, so this will be the 23.6 Fibonacci level which we want to add, and we can see that this is around the area. So we are looking at this exhaustion coming in around this point, and then we can then look to start shutting to the downside. And when that start happening, guys, one of the pairs I'll look to actually take great advantage of will be the USD CAD. So I'll be looking at the USD CAD very, very seriously for that short trade to come into the market. Why I want to be looking at that pair. Okay, so let me just quickly speak about this pair in a moment. Okay, so that is a setup I like to trade many of the time. Okay, I like to trade many of the time with students here that whenever you have this curve here or the S curve here, definitely this S curve, if it will meet the criteria, would make another S curve to form here a 0, W, X, Y, X, Z pattern. So it's going to form this kind of pattern here of the W, X, Y, X, Z. So here I expect one more drop before the rally to the upside. Okay, so I expect this to happen. Okay, 5-wave movement, then a correction to the upside. That's what I expect to see. All right, guys, so that'll be all for today. I hope you enjoyed this presentation and see you next time.